Hi everyone, and welcome to our video on reverse mortgages. In this video, we'll explain what a reverse mortgage is, how it works, and the pros and cons of using one. Let's start with the basics. A reverse mortgage is a type of home loan that allows you to convert a portion of your home's equity into cash. Unlike a traditional mortgage where you make payments to the lender, with a reverse mortgage, the lender makes payments to you. The amount you can borrow depends on several factors, including your age, the value of your home, and the interest rate. The older you are and the more your home is worth, the more you can borrow. The interest rate is also a factor, with lower interest rates allowing you to borrow more money. So, how does it work? Let's say you own a home worth $500,000 and you're 70 years old. With a reverse mortgage, you could borrow up to 50% of the home's value, or $250,000. The lender would then make monthly payments to you, which you could use for whatever you want, paying bills, taking a vacation, or anything else. But what are the pros and cons of using a reverse mortgage? To help answer that question, I've invited a financial advisor to join us. Hi, Jane.
Hi, host.
So, what are the pros of using a reverse mortgage?
Well, one big advantage is that you can access the equity in your home without having to sell it. This can be especially useful for seniors who need cash for living expenses but don't want to leave their home. Additionally, with a reverse mortgage, you don't have to make monthly payments to the lender, which can free up cash flow for other expenses. A reverse mortgage is a loan product that can provide a range of benefits to eligible borrowers. Here are some of the main pros of using a reverse mortgage. 1. Access to home equity without having to sell. One of the primary benefits of a reverse mortgage is that it allows borrowers to access a portion of their home's equity without having to sell their home. This can be particularly helpful for seniors who may need extra income to cover living expenses, but want to stay in their home. 2. No monthly mortgage payments. With a reverse mortgage, borrowers do not have to make monthly mortgage payments to the lender. Instead, the loan balance increases over time as interest accrues. This can free up cash flow for other expenses. 3. Tax-free proceeds. The proceeds from a reverse mortgage are typically tax-free, which means borrowers can use the money for whatever they need without worrying about a tax bill. 4. Flexibility in how funds are used. Borrowers can use the funds from a reverse mortgage for a variety of purposes, including paying off debt, covering medical expenses, or making home improvements. This flexibility can be particularly useful for seniors who may have limited income and need to cover unexpected expenses. 5. Loan proceeds are not considered income. Because reverse mortgage loan proceeds are not considered income, they do not affect Social Security or Medicare benefits. 6. Protection against declining home values. One of the unique features of a reverse mortgage is that the borrower's liability is limited to the value of the home. This means that if the home's value declines, the borrower and their heirs are not responsible for any shortfall. 7. Can provide financial security in retirement. For seniors who may be struggling to make ends meet on a fixed income, reverse mortgage can provide a source of income to help cover expenses and provide financial security in retirement. Overall, a reverse mortgage can be a useful tool for seniors who want to access their home equity without having to sell their home. However, it's important to carefully consider the pros and cons of this type of loan and to work with a reputable lender and financial advisor to ensure that it is the right choice for your individual circumstances.
That sounds like a good option, but what about the cons?
Certainly, here's a more detailed explanation of the potential cons of using a reverse mortgage. 1. Interest rates can be higher. Interest rates for reverse mortgages are generally higher than those for traditional mortgages. This means that over time, you could end up owing more than your home is worth. The higher interest rates can also mean that the amount you can borrow is lower than it would be with a traditional mortgage. 2. Fees and costs. Reverse mortgages can come with fees and costs, just like traditional mortgages. These can include origination fees, mortgage insurance premiums, and closing costs. These fees and costs can be significant, and they can eat into the amount of money you can borrow. 3. Interest compounds over time. With a reverse mortgage, you're not making monthly payments to the lender. Instead, the interest on the loan is added to the balance each month. Over time, this can add up quickly, and you could end up owing more than your home is worth. 4. Limits on how much you can borrow. The amount you can borrow with a reverse mortgage is limited by several factors, including your age, the value of your home, and the interest rate. Depending on these factors, you may not be able to borrow as much as you need. 5. Repayment after you move out or pass away. When you take out a reverse mortgage, you're essentially borrowing against the equity in your home. When you move out of the home or pass away, the loan will need to be repaid. This can be a burden on your heirs, who may need to sell the home to repay the loan. 6. Potential impact on government benefits. If you receive government benefits such as Medicaid or supplemental security income, a reverse mortgage could impact your eligibility. This is because the cash you receive from the loan may be counted as income, which could reduce your benefits. It's important to note that while there are potential downsides to using a reverse mortgage, it can still be a good option for some people. It's important to talk to a financial advisor and do your research to determine if a reverse mortgage is right for you.
Those are all important points to consider. Thanks, Jane. So, in summary, a reverse mortgage is a type of home loan that allows you to access the equity in your home without having to sell it. The amount you can borrow depends on several factors, including your age, the value of your home, and the interest rate. While there are some advantages to using a reverse mortgage, there are also some downsides to consider. It's important to talk to a financial advisor and do your research before deciding if a reverse mortgage is right for you. Thanks for watching, and we'll see you next time.